All right, guys. So this is class number three. Class number three, we're gonna be talking about some strategies that I love to use. We'll be talking about flags. We'll talk about pennant patterns. We'll talk about the break and retest, which isn't really a chart pattern, but it does use a lot of the basic concepts. And then I'll show you some examples of some chart patterns that have played out and some that are setting up that I think will play out very soon. So first, we'll first start off by talking about or just refreshing on what was those basic concepts, right? So everything that I do is stemming from the basics of trading. I try to make trading as easy as possible, right? So I have pillars that I use to make decisions to raise my probability of being right. Because options is really just a game of probability. We're betting on it to go up or we're betting on a stock to go down. But you need things to understand where you expect something to start going up, where you expect to start going down. And believe it or not, you can tell how fast something may be about to go up or down, right? So I kind of think of trading like it's kind of like a math equation, um, probability and time, right? So you want to have probability as high as possible and time as low as possible, right? So if I was to draw it out for y'all, this is getting a little nerdy, but if I was to draw it out, my equations for trading kind of looks like this: probability divided by time. We want this number as high as possible and this number as low as possible. We want our probability to be high as we can get it and the time to be as low as we can get it to get this number, right? So this number would be how good is the trade. We want that to be as high as possible. Okay. So these things are going to help you do that. So let's talk about the chart patterns. Okay. So there are certain ways that a chart sets up that tells you that a stock is more likely to go up or down. The most common pattern that you're gonna see me use and me talk about is the flag pattern, right? So a lot of you know that I love the flag pattern. I've seen a lot of you implement it. Um, it looks like this. So the flag pattern is a continuation pattern. Okay, it's a continuation pattern that you only want to trade from the direction from which it came. All right. So we first was talk about a bull flag. A bull flag pattern is a continuation pattern that tells you that stock is more than likely to continue to the upside. Okay. So what you have a few things here. Let's talk about the basic. What are the basic concepts that you use as far as finding a chart pattern? All right. So think about our basic concepts. You go back to the other videos to get those. Patterns are made from a combination of candlesticks and trend lines, or candlesticks, trend lines, and levels. Okay. Those three basic concepts are what make up chart patterns. All right. So you will first notice a bull flag pattern from a stock that is having a significant run up and then it pulls back, right? So when it pulls back, the trend lines are going to be making a diagonal kind of even type of move, right? So it'll be moving diagonally down. It'll form a flag. This part is called the pole, and this is the actual flag part here, right? And the trend line acts as a support or resistance. The bottom one acts as a support, top one acts as a resistance. And you're looking for it to break the upside. All right. You're looking for it to break the upside here to look something like that. And you want it to continue upward. All right. And then as far as targets, you start using your levels, right? Levels always tell you where you expect something to go next. Okay. That's a bull flag. A bear flag is a chart pattern that tells you that a stock is more than likely to continue downward. All right. So it will be the same thing. This is the pole. You have your trend lines here that act as a support and resistance, and you're looking for it to break down. Okay. Now, this is the sauce. This is the sauce about chart patterns. All right. If you write this stuff, make sure you write this down. This is the sauce about chart patterns, how to make them even more powerful for you. You only want to trade chart patterns that correspond with the overall direction of the stock. All right. So if a stock has been bullish, or even the overall market, All right. If the stock in the overall market is bullish, I want to be looking for plays that have bullish patterns. Okay. So right now, the stock market is at the highs because it's trying to break out right now. The stock market is trying to break out again right now. So knowing it's trying to break out, I really want to be looking for plays that have this bull flag pattern. Could plays that have a bear flag pattern still play out? Yes, but probability. If the market is breaking out to the upside, I'd rather take advantage of a stock that's already trying to break out to the upside as well. Okay. So that's some sauce with patterns. How you make chart patterns better, you trade the chart patterns that are going with the overall direction of the stock and the overall market. Okay. So that is the flag pattern. I have plenty of information about the flag pattern. If you look back in the Discord, you can see it's probably thousands of charts that I posted with a flag pattern at this point. So that's the flag. Let's talk about the pennant. This one I can't draw very well. I cannot draw the pennant very well at all, and it's very similar looking to a flag, but there's one main difference. So this is a pennant pattern. Once again, you do have your pole, right? So you have your run up, and then you have consolidation. Consolidation is what forms this pattern here. Okay. So a pennant pattern is a neutral pattern because it can break either way. Why can it break either way? You have to understand what the trend lines are telling you, right? This is why we have to know the basic concepts because we know that a stock moves in three ways. It moves in higher highs, higher lows, lower highs, and lower lows, or it's consolidating, going sideways, right? What these trend lines are telling you right here, look at this one, and then you look at this one. This trend line is going upward, means that the stock is trying to make higher lows. But you got this trend line that is saying that the stock is trying to make lower highs. So they're conflicted, right? Which tells you that people are disagreeing on what the stock price should be. So you really want to be patient on this type of pattern, and this type of pattern is more prone to fake outs. I'll tell you that now. It's more prone to fake outs, but it is still a high probability setup. You still want to mainly look to trade it the way from which it came. Okay. So if it's a bullish pennant, still try to look for upside mostly. Or if it's a bearish pennant, will look something like this. Once again, my drawing with them isn't great. You still want to look mostly to play it to the downside if it's a bearish pennant, and upside if it's a bullish pennant. And the same exact thing with the flags. Look for the pattern that corresponds with the overall direction. If the stock has been going down, 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 or the overall market has been going down, 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 look for bearish patterns. All right. Right now, I'm really not looking for bear flags. I'm not looking for bearish pennants. The overall market is bullish. You see, we're trying to break out. All right. There's no reason to look for bearish patterns right now. Could this reject? Yes. And if it does reject, then we could look at it. But as of right now, we don't have a reason to be bearish. Okay. So that's the flag and the pennant. Now, I usually stop here, but we're going to talk about some more patterns today. We're going to talk about some that people really don't talk about a whole lot. So I'm going to clear this again. Let's talk about some more patterns. Let's talk about where we want to go next. Another chart pattern. Let's talk about the rising wedge and the falling wedge. So the rising wedge and falling wedge are reversal patterns. All right. So I've given you three types of patterns here. I've given you continuation, I've given you neutral, and now I'm about to give you a reversal pattern. So what a rising wedge looks like is a stock that has had a down move and then it has a sharp up move. But the sharp up move will look a little something like that. Okay, so the wedge kind of looks like a bear flag a little bit, but the main difference is as it gets higher here, the wedge gets tighter and tighter and tighter. Okay, and you're looking for it to break down in the same manner as a bear flag. Okay, So you're looking for it to break down in the same manner. So a rising wedge is a bearish pattern and it's a reversal pattern. It looks like it's going to reverse, but if it starts to break down, that's when you're looking for the puts. Okay. And, sometimes can it reverse back up? Yes, it can. But you have to use other basic principles to really start understanding, is it going to reverse, right? So if is it breaking the higher lows, right? Is it forming bearish candlesticks? Okay, you got to look at things like that. That's why we have to understand more than just chart patterns. Chart patterns alone is not going to make you a good trader. I promise you. Okay. So this is the rising wedge. The rising wedge is a bearish reversal pattern. Okay. Now, the falling wedge looks a little something like this most of the time. Now, you can have a falling wedge that has came from the bottom that will kind of look a little something like this, but most of the time I like to play falling wedges that have already had a nice run up, and it will look a little something like this right here. Okay. So the difference between these wedges and the flags are just the way the trend lines are forming, right? So the trend lines get a lot tighter on wedges. Okay. A wedge, you think about like a doorstop. That's a wedge. Think about the shape of it. Like it gets smaller and smaller as it gets to the end of it. That same way this wedge looks. So with this falling wedge, same exact thing. Trend line as a supported resistance, and you're looking to take it when it breaks out. All right. So think about what kind of things could you want to see when it breaks out. All right. You start thinking like that. That's when we start using our other principles, right? Or pillars. What if you see a breakout and the candlestick is a bullish engulfing, or if it's a huge bullish hammer? Okay. Things that tell you that buyers are stepping in. And let's also say that you got volume coming in. All right. When you start thinking about things like that, it makes it a lot easier. You have a lot more conviction to take a trade, right? And always understand that just because you have a high probability setup, everything that I'm giving you is a high probability setup. Just because you have a high probability of being right doesn't mean that you're not gonna lose. I lose trades. All right. You guys see me lose trades. I don't win every trade. I win a lot of them. I don't win every time. Right? But the thing is, you have to always manage your risk because you got to live to trade another day. If we take 15 of these chart patterns, I guarantee we're probably gonna win probably 12 of them. Okay, if you get your entry right, you learn how to get your entry down. I guarantee you we'll probably win 12 of them. All right, so these high probability setups are amazing. You just have to learn how to use them in conjunction with our other principles. All right, so that is the wedge. So I've given you a continuation pattern, I give you neutral pattern, and I give you a reversal pattern. You got three types of patterns that you can use right there. Two patterns apiece. So that's six chart patterns that I gave you right there alone. Okay. Now, let me give you another one. Let me give you another one. And I'll pull up an example to talk about this one. The next type of setup that I'm going to teach you guys is called bullish divergence. Okay. Now, to trade this, the concepts that you need to understand is trend lines, understand levels, and then you have to have a little bit of understanding of candlesticks, and you can throw in the indicator, right? Because that's what you use to see this pattern, right? So notice everything that we're talking about is using basic principles that I've taught at the beginning, okay? If you understand the basic principles, you can trade the way that I'm teaching you to trade here. And you don't have to trade the way that I trade. You can trade totally different, but these basic principles are going to be used in almost all strategies, just in a different way. I guarantee you. All right. So the bullish divergence, I'm just naming it BD. Okay. Bullish divergence. All right. You also have bearish divergence, but we're talking about bullish one first. Two things that you are looking at here. You're looking at the stock trend and you're looking at the RSI. On bullish divergence, you're going to see the stock trend going downward, which I'm actually, I'll use an arrow for this. The stock trend is going to be coming downward, but the RSI is going to be going upward. All right. So the stock is going to be making lower lows. The RSI is going to be making higher lows. All right. If you look right here on DIA, I'll make this bigger. Stock price, lower lows. RSI, higher lows. Notice what else did you start getting here? It fell to a support, was strong at a support. Cool. What else did you get? Look at this candle, a bullish hammer. Okay. So when you start thinking about what do I have here to be able to tell me, okay, maybe I can take this trade to the upside. I got bullish divergence. I have this stock that held support, and I have a bullish hammer that tells me that buyers are trying to step in. If I take this trade and I lose, if this trade goes below here, I know that it's not working. All right, especially if it closes below on a daily. But I have all these things that's telling me that it's more than likely to do that. Okay. So that's bullish divergence. You want to see another example? Would be NVIDIA, would be the newest example here. Same thing. Now, this is the 4 hour chart. Same thing here and here. Okay. Stop price lower low, RSI higher low. Then what do you see? Push right back up. Okay. Let's see. Now, one that has it now, I'll save that. I'll save it. I'll save it. We'll say that to the end. Okay, that's bullish divergence. Now, the other flip side of that is bearish divergence, right? So bearish divergence is a lot of the same. It literally is just changing because the um stop price on the bearish divergence will be going upward, but the RSI will be going downward. So let me write that out for y'all real quick. Stock price will be doing that. RSI is going to be doing this. Okay. And there isn't a lot of examples of this right now because the stock market has been bullish. I would have to really go back a little bit to give y'all an example. Let's see if it's one on SPY. Probably not. You don't have a lot of examples. The market's been so bullish lately. Mm, only one that I can think of off the top of my head is when the market fell for COVID. You had bearish divergence there. So if you look right here, take a look at the stock price, take a look at the RSI. Okay. So if you see that, it's like it doesn't match up. You had a fall. All right. The problem here is bearish divergence is a little bit harder to time, in my opinion, because the stock market is made to go up. Now, it's tough to time that bearish divergence because this was also the COVID drop, right? Even though it dropped like this, look how fast it recovered. You know what I'm saying? So it's tough. It's tough doing the bearish divergence. Even here, how long did this have the bearish divergence? This is from 2018, and this didn't fall all the way to 2020. So you would have been waiting 2 years for this bearish divergence to play out. Just think about that. Okay. So we ain't gonna spend a bunch of time on bearish divergence because it doesn't happen nearly as much. But I do want y'all to have that in your back pocket. Okay. Now, let's see. Let me give you a very simple setup to use here. Let me give you a simple. We're gonna be going back to DIA, and I'm going to clear the chart here. Let me take this off. You don't need that. This setup uses just a trend line. Let me see, where was it at? This setup uses just a trend line here, okay? And it's called the three touch rule. You will see me talk about this one as well. Mainly when you see me talk about this one, it's going to be from a daily chart. So the three touch rule is literally exactly what it sounds like. Usually when a stock touches the trend line for the third time, it will keep going in that same direction. You see here, 1, 2, 3. Okay. 1, 2, 3, push right back up. Now, when you start looking at it like this, and I showed you that we have that third touch. Now let's think about what all we had. This is when you start thinking about this in terms of probability. Imagine if you would have seen this, you're like, okay, we got the three touch rule. That's one thing. It's saying upside. What else do we have saying upside? We got this. oh, We got this bullish divergence also saying upside. Okay. What else do we have saying upside? We got this stock holding support with the bullish hammer. That's also saying upside. I hope you guys see what I'm doing here. We're using different things to raise the probability. We're looking for things that are in favor of this, right? And you don't want to force it to be in favor, but this is what the chart says. I'm not making this up. I'm not forcing it to look bullish. This is just what these setups say. All right, you got the three touch rule. You have bullish divergence. You have a bullish hammer right near the support. That's three different things that tell you that buyers are in, or buyers are going to possibly come in. All right, so that's really the gist of everything that I do is trying to put probability in my favor. But you don't want to force it. You don't force it. You let the plays come to you. One great setup can make you more money than 10 setups that you force. Okay? Don't force a play. All right. So we got the flags, we have the wedges, we have pennants. Give you guys the divergence, three touch rule. That should be about 10 plus setups on its own. It should be. All right. Now, so this is things that kind of setup that you will see here. But now let me give you a setup that you use or that I love to use when I'm day trading. So when I'm day trading, I either love to look for the flags or I like to use the break and retest strategy. All right. So let me teach you what the break and retest strategy is. And before we talk about it, once again, we're going to talk about what basic principles do you need to understand to trade this strategy. You need to understand levels, need to understand basic market structure like trend, and you need to understand candlesticks. Three things that are the basics that we talk about. You should understand those three things, or you can trade the break and retest. Okay. Let's talk about an example that hasn't played out yet, but I'll teach you exactly how I plan to use it. So if we look at SPY, let me show you exactly what I would look for. We look at SPY right here. Notice that SPY is right near a key level, right? So pretty much at all-time highs. I probably could nitpick a little bit and make it a little bit closer. Might be a little off, but you get the gist. So let's say 610.84 is all-time high. Notice that we are super close to it here again, right here and right here. That's the level that we need to break to continue to the upside from the larger time frame perspective. Cool. Okay. So we know top-down analysis at this point right here is where we need to get above to continue to the upside on a larger time frame level. Now, when you're day trading, let me give you this trading nugget as well. I love to day trade things that are happening on a larger scale. All right. So I love to day trade a stock that's breaking out of a bull flag on the daily chart, right? Because if it's On a daily chart, you have a lot of data. That means that a larger move can happen. All right. And when you're day trading, you guys know it doesn't take a whole lot for you to start making or losing a bunch of money, especially when you start trading with, you know, I say when you get to 5+ contracts, you can scale pretty quickly. All right. So let me make sure that people aren't in the yeah, there we go. All right, cool. So um you need a level here, right? You usually want to have a target, but since it's all-time highs, you don't really have a target. The easiest places to kind of put targets for all-time highs is whole numbers, right? So at this point, you would do 611, 612, 613, so on and so forth. Now let's talk about how do you actually use this. So we have our level. What do we actually want to see? And I'll adjust it a little bit more. The high is actually right at 611. All right, perfect. Cool. That's perfect. So the all-time high is actually right at 611. What are you looking for? You're looking for confirmation that the stock actually wants to go up. Okay. So what would that look like? You want to see the stock break the level, come back down, and go back up. In simple terms, you want to see the stock break out, come back down, and go back up. Now let's make this a little bit advanced. When we talk about the breakout, everybody knows what the breakout looks like. You know, those big green candles. Don't chase the up move, especially when you're day trading. Wait for the pullback to take it higher. Here's the thing. How do you know when it's time to take it higher? Understand that the stocks don't just go straight up or straight down. It's constantly testing levels. Okay. It's constantly testing things. And you got to think about like, okay, the buyers push it up here, but the sellers want to bring it back down to this key level and say, okay, buyers, do you guys really like it right here? Or can we send it back down and fake everybody out? So you have to understand what things tell you that this stock actually does like this level and buyers are in. You got to go back to your candlesticks, bullish hammers, bullish engulfings, those big green candles with volume. That's what we want to see on the retest. Okay. Those are the types of things that you want to see for you to enter the trade. All right. And I wish it was a live example that I can think of off of my head here. But as far as a target and stop loss, etc., the break and retest is the absolute best strategy as far as day trading when it comes to understanding where's your stop loss, where's your target. Because a simple system that I use is if I'm using a break and retest, I want my first target to be high of day. I want my first target to be high of day. Then my levels after that is the levels that I have previously. Okay, so in this case, it would be 612, 613, etc. All right. Now, the stop loss, this is where you have to understand basic market structure. The stop loss would be that next um previous higher low. So let's say that this stock, let me let's redraw this so you can get a better visual of what a stock actually looks like. You guys know a stock might be it'll just move around, right? It'll move around, then it'll break out, pull back, and do something like this, right? You might have a huge move. It might even pull back down here before it goes back up. Okay. Now, let's say you get a bullish hammer right here, right at this level. And guys, it doesn't matter if it comes down a little bit below it. Actually is even better if it comes down a little bit below the level and then just has a blast back up, right? So don't be afraid if it does go down a little bit lower than your level. All right. So what you want to see is that move back up. So if you get that bullish hammer or big green candle, whatever, where is your stop? Your stop for me, there's two things you can do. Number one, you can put your stop under the candle right? So it's a little bit tougher to do this if you're doing this on a 1 minute. I like to trade the break and retest on a 1 minute and the 5 minute. Most of the time I'm on the 1 minute because I take my trades mostly in the first hour of the day. But sometimes I do trade on a 5 minute. One thing you can do is have your stop loss under a candle, or you can have your stop loss at the previous higher low. All right. So here are your higher lows right here. Higher low, higher low, higher low, higher low. If you get in here, your stop is going to be this previous higher low. Okay. That's one way to do it, or you can do it underneath the candle, which is a little bit tougher to do if you have a 1 minute um chart. Okay. And it also just depends on how far it is. So let's say like here to here, this is about 40 cents, right? So that's not a whole lot. But let's say that that previous higher low is all the way down here at like, I don't know, $9. Let's say that the stock just had a crazy push up. It might not be wise for you to try to risk all of this, especially when you start using things such as your risk calculator here. You always want your risk to be at least a two minimum. And if you was aiming for something like this, your risk reward is a 0.76, so that's not good. All right. Whereas let's say the candle was here. This was the candle that you're going to be using. Even here, it's not super great, 2.35, but a lot better than down here. All right. So always have to understand your risk to reward. That's when you can really tell, do I want to use single candle um or do I want to use that previous higher low? So it's kind of you gotta just kind of see what the risk to reward is. Um yeah, that's the break and retest. There's not a whole lot to it because after you get in, you just have to trust it. You just have to trust it. Understand that this is probability. Okay. It could it could push up a little bit and then come back down and stop you out. Right? It could just go straight to the target. It could, as soon as you get in, just absolutely get killed. It can do that. But everything in between your stop loss and your take profit is just noise. That's how you got to look at it. Everything in between your stop loss and your take profit is just noise. I've had break and retests that go straight to the target. That I've traded live with y'all. Y'all have seen I've had break and retests that go straight to the target, some that play around and go to the target, some that I get stopped out in the first minute or sometimes less than that. It's probability. All right. But I'm telling you, I'm giving you the highest probability setups that you can have. Okay. So use these. I promise you, use them, trust them, and study these. I have tons of videos, tons of live sessions, some that I lose on, some that I win on. Just study them. All right. You really cannot escape the screen time when you're trying to learn how to trade. You can't escape it. I promise you. No matter who your mentor is, none of that matters. You got to put in the screen time. All right. So the biggest thing that I help you with is I shorten your learning curve. I give you all the things. I take away all the roadblocks that you don't have to go through, that I had to go through to learn this stuff. Okay. All right. So those are the setups. That's really it. All right. So now I'm going to take a few minutes to just kind of show you guys some plays that are setting up now. And there's actually one that's setting up a chart pattern that doesn't happen a whole lot. That's actually pretty good here. So let's go to snow. Here's a bonus chart pattern for y'all. Here's a bonus chart pattern. Snow, and they actually pointed this out in the chat. I didn't even see this. They pointed this out in the chat. This pattern right here is called a cup and handle. This is when a stock has a big rounded bottom, and then it has a sort of like a flag right here. All right. So this is a bullish type of pattern. It has a rounded bottom, and then at the top, kind of looks like a flag. And you're looking for the breakout, and you're looking for it to continue. So what it's doing right now, as you can see, looks like we've broken out and looks like we're retesting. Okay, so it could be a good buy the dip opportunity. And of course, if it continues downward, then it wouldn't be. All right. So this is one that is happening now on Snow. Snow does have earnings coming up, so it's going to be more risky to play it. But if I had to bet, I'd bet on him to go upside just from a technical standpoint. All right. Let's see. This one actually played out before, and a lot of us banked on it. Amazon. So Amazon right here, notice what you see. And we actually day traded this. All right. Amazon, this is a bull flag pattern. Pole, trend lines, breakout. All right. That's an example of something that played out that we actually had used. And now let's talk about PayPal. What setup do I see with PayPal? I kind of like it a little bit better from the 4 hour, but let's talk about the daily first. Daily chart on PayPal. Let's think about our basic principles. Levels. Take a look at PayPal right here. PayPal, look at this right around 76. So I kind of got like a little box because it's not super clean here. So around 76 to 77-ish, maybe, or 76 to 76.5. You see this box has held as a support. And this is in September of 2024, October of 2024, November of 2024. Now we're back here again. But what did it do every time it got right here? Huh? Huh? Hmm. Let's see if it does it again. I'm taking my chances on it, do it again. Let's also throw in that it just reclaimed the 200 MA. Okay. Let's also throw in, if you guys want to really start getting technical, let's start looking back more. So notice in 2023, this is getting deep, man. This is getting deep in the charts. 2023, this was a resistance. So it has tried to turn the previous resistance from 2023 into a support. You won't even know to look for this stuff unless you understand levels and how time frames work. All right. So you always try to understand your time frames and look for those levels. We got a question. I just seen it here. So RJ, when you draw your levels, do you always start with daily or weekly, then go to smaller time? Yes. Most of the time we're gonna be starting with my daily. And a lot of times, honestly, a lot of times you will have levels that you can just find on the daily and go off of. The levels really start getting more and more useful after you find your daily ones, like when it starts to get towards pre-market, then you kind of see how close it is to a level and things of that nature. But definitely, yep, always start on those larger time frames, and then you can make your way down. And another tip you can do is always label your levels. All right, because you would not want to be holding. Think about this. This is a daily level of support. Think about if somebody did not know that this was, and I didn't spell support right, but it's cool. Think about if someone was in puts here and they didn't know that this was a daily support level. Let's say they had this level drawn, but they didn't have it labeled. They're red, right? They got stopped out. They didn't understand that this was a level of support that it had failed to break down. Okay. So always label it. You don't want to be day trading at a level that you don't know what it is. All right. That's just a little tip that helped me. Okay. Let's throw in something else with PayPal. Pop quiz. Pop quiz right here. What is this? I hope that made sense. Let me know if that made sense. Let me know if that made sense. Pop quiz on PayPal here. What setup is this right here? What setup is this that we see? We got lower lows on the stock, higher lows on the RSI. What is that? Anybody know bullish divergence? Exactly. Bullish divergence. So not only we at a daily level of support, which I wish I would have caught this a little bit sooner. Kind of mad I didn't catch this sooner. We only about a dollar late, but at the same time, I don't want to be late at all. Oh, okay. Yes, that's bullish divergence. Yep, perfect. So we got that from daily. Said, can't that trick people to be a bear flag? Where at? Where you see it? I don't really see it. I don't really see it. If you're looking at it from like this wouldn't be a bear flag. That wouldn't be a bear flag. A bear flag would look like this right here. Or this is kind of going like that. If, if that's what you're talking about. Now, could this reverse back down and fall through support? Yes, it could. It very well could. But I'm gonna take my chances on betting on this daily support and this bullish divergence because we've seen plays in our most recent play, Nvidia, we've seen it play out. All right. And not saying that PayPal is Nvidia, but at the same time, um, you gotta keep taking the setups, right? You gotta keep taking the setups. They're not gonna always win, but you will never win if you don't take them. All right. So let's talk about some targets. I see we had a question about targets here. That's a great question. Now, targets are always for me gonna be at the levels, right? So you don't always have to hold to the levels. If you like to do percentage, you can do that. But I like to do levels. Um, so some targets here could be the top right here. So this is right around 80. So like 79.7 could be a place to look to trim, right? Another place could be where this gap starts, 82, where this gap ends, 86. So in the grand scheme of things, the smaller target would be right here. If we're like, I don't know if it's going to actually rebound, which, but we do have evidence of it doing so, right? But this would be my targets here, right here, where the gap starts, and I'll label the gap right here, and then where the gap ends. Could take some time to play out. So really, the longer the contracts, the better. To be honest with you, I got March just expecting a bounce here, but longer the contract, the better. Um, in this case, so this would be my targets. I hope this kind of makes sense. So I'll go ahead and label that. I'll put this in the chat as well. TP1, TP2, TP3. All right. So we'll see if that plays out. Where does it not work anymore? It doesn't work really if it really kind of needs to break down under here. Right. So at this point, you kind of got like $2.40 of room of downside for it to officially not work, which is not a whole lot. PayPal is a stock that you don't typically expect to move $10+ in a day, of course. Um, but that's kind of where you'd be looking for a stop loss. So I'm very satisfied with the risk to reward as far as the grand scheme of things. I called this play around, what was it, around like 77.5. If you want to be safe and do the actual level, which I probably wouldn't, um, depends on where you're targeting. If you're just targeting here, then of course your risk to reward wouldn't be great. You need to target a little higher. If you're targeting at least up here, then your risk to reward starts to look pretty good. If you're targeting even higher, it looks even better. So, um, So it's a good risk to reward trade. If it does dip down and give us like a hammer down here again, I would add again. Um, yeah, I would add again. So that's the PayPal play right now. Let me know, does that make sense? Does that make sense to y'all? That's my exact thought process. Cool. Yep. So that's a strategy in a nutshell. We're using probability, and once again, this play could completely blow up and not work. I mean, it is what it is. We'll look for the next bullish divergence setup to swing. So um, that's really what I want to talk about today. I've given you guys quite a few setups, man. We talked about bull flag, bull pennant, bear pennant. Um, what else? Bull flag, bull pennant, bear pennant, rising wedge, falling wedge, bullish divergence, bearish divergence, three touch rule, cup and handle pattern. That's 10 right there. I might be missing one or two, but that's 10 on its own. Let me give you one more while I'm thinking about it. Let me give you one more while I'm thinking about it. Now, this one hasn't played out yet, but it looks like it might. Now, this is one that, if it plays out, it's gonna take some time. I'm gonna tell you that now. It's gonna take some time. Um, I'll go ahead and we'll keep it on here. Whatever. We already started talking about it. Now, this one is called a inverse head and shoulders, right? So inverse head and shoulders is a bullish pattern where you have the head down here. It's inverse, and I'm gonna show you what a regular head and shoulders look like here in a minute. But you have the head, shoulder, shoulder, and you're looking for it to break to the upside. Now, this one here is you can see it on a daily, but you can also probably see it on the weekly here. Yeah. So this is one that could take quite some time to play out, because it's on a weekly. But if it breaks out, I mean, you're talking about if you want to talk about a huge move that could happen, yeah. You're looking at a huge move that could possibly happen, especially if it breaks like 21. Your next level above that would be somewhere around 30 plus. All right. Um, and where does it kind of not work? If you was to get in now, it wouldn't work. It really would need to drop back down here, to be honest with you. Um, so yeah, this looks like it's more upside than anything. But that's a uh inverse head and shoulders. And now let me show you a regular head and shoulders pattern. It's what a regular head and shoulders pattern look like here. All right. So the same exact thing, just the opposite way. So that's two more patterns there. Head and shoulders, you won't see a bunch of those right now just because the market is so bullish, but you will see it sometimes. So we got another question here. Say since PayPal was a swing, what time frame was my entry on? The daily. Yep, I just got in on a daily. If you were trading on a shorter time frame, 1 minute to 5 minute, what expiration would you be looking at for contracts? Weeklies, next weeks? That's a great question. Now, that would depend on one thing for me, or two things. It would depend on what day is it, and it would depend on how's the overall market. So if it's on Monday, Tuesday, Wednesday, I'm getting weeklies, 9 times out of 10. Now, the way the market has been lately, right? So you gotta understand with Trump, he can make one tweet and the entire market can explode to the upside or downside. So it's a lot more risky playing weeklies right now. Um, definitely don't swing a week. Definitely don't swing it. But when you're day trading, I like to get weeklies for day trades. Unless it's like Thursday or Friday, I'll probably get next week. Fridays it's always safer to go next week. Always safe to go next week, unless you're doing a complete YOLO where you don't care if you lose or not. All right, it's always safer to go next week on like Thursday and Friday, but Monday to Wednesday, 9 times out of 10, I'm getting weeklies. Thursday, Friday, next week to be better. But yeah, that's really what I wanted to um go over in this class here. So I hope this was helpful. Give you guys a lot of setups here, a lot of setups, a lot of stuff to study. If you kind of confused on any of these concepts, like I said, you look back in the previous two classes. Also look back on the pillars of options trading videos. Those are literal classes that I've had. So they go in depth on those different concepts. So now I'm gonna start recording this and we can do some questions. Let's see.